Yesterday's event is more about the shock element in itself. We can say is it will lead to the rise in the EMI in our EMIs, or the tenure of the loan will go up if you don't want the EMIs to go up, because home loan is one of the biggest loan that one has in his kitty. I mean, if one has it, so one has to keep it under control. So it was inevitable that a rate hike would happen, because that is the way you can sort of, otherwise the prices will keep going up for various commodities. So I mean, it was very much expected that RBI will do things to or take steps to bring down the liquidity in the market, and also kind of raise rates so as to absorb the liquidity in the market, and also to which will have an impact on the consumption, because it then when the rates go up, then obviously then you don't borrow to kind of consume, and that does have an impact. So given that background, I mean, it was well expected that yes, the a rate hike was coming. Only a month back, RBI had its monetary policy meeting, and they did not kind of bite the bullet. They did not raise the rates, even though they indicated that going forward there'll be rate hikes. But a midterm sort of rate hike, a meeting was called of the MPC, and yesterday the governor announced two steps. One was to raise the repo rates by 40 basis points, which essentially means that the cost of borrowing for banks from RBI goes up by that much. So it has gone up from 4% to 4.4%. What it means that, okay, when the cost of funding for banks go up, then they will raise the rates at which they lend in turn to their customers. So that was one thing. The other step that RBI took was to increase the cash reserve ratio. Now, this is the amount of money that banks need to keep as cash, and it's a regulatory requirement. So that went up from 4% to 4.5%, which means that, I mean, that is the amount by which, I mean, which is less available for banks to do lending. So they have to, the regulatory requirement goes up in terms of keeping cash aside, and that much money they cannot do, they cannot use for business. So in effect, that also increases the cost for the bank. So that also will have a role, will have an impact on the lending rates. So yes, rates have been raised by RBI. CRR has been raised, and it will have a bearing on all of us. Yeah. In fact, when it comes down, there is it happens with a lag, but when the rate goes up, it is immediately transferred. That we have seen in the past, and it will happen. In fact, most of the repo rate loans, now that the banks offer repo rate loans, I mean, since the repo rate has gone up from 4 to 4.4%, they will immediately pass it on as it is. So MCLR, they will do the calculation for that, and they will do PLR. Similarly, housing finance companies, they will do the calculations, and they will accordingly pass it on to the. It will lead to the rise in the EMI in our EMIs, or the tenure of the loan will go up if you don't want the EMIs to go up. So what if to tell you through an illustration, if suppose you had a 50 lakh loan and the rate was say 7%. The current outstanding is 50 lakh. You have 15 year of tenure still left to kind of 180 months still to go. If the rate goes up from 7 to 7.5%, then it would mean that your EMI would go up by around 1,400, 1,500 odd rupees every month. In case you don't want to increase the EMI, and you can talk to your bank, you can go ahead, your tenure would go up. So how much does it go up? It would go up by around 10 to 11 EMIs. So from 180 months, it becomes a 192 month, 191, 192 month loan. That is one. Now, but the thing is that this is just one rate hike impact that we are talking of. If we say over the next 1 year or so, there is a 200 basis point hike. I mean, just to take an extreme sort of scenario, if there is a 200 basis point hike over the next 1 year. Now that would have a significant impact. Your EMI would go up by say 5,700 odd rupees on the same loan that we're talking about. So from 44,000 odd rupees, it goes to around 50,700 odd rupees, something of that sort. If your income has been impacted and you don't think you can pay that EMI, you'll have to go for a tenure hike. Then that, how much does the tenure go by in such a scenario? It would go up by 60 months. So from 180 months, it becomes a 240-month loan. So 5 year more, you'll have to continue to pay your EMI. So which is, from a personal finance aspect, that is not a right thing to do. I mean, one needs to keep the loan under control. You can't let your tenures go abnormally. I mean, you can't be repaying after your retirement. No, I mean that situation should not be there. So one needs to look at what they can do in terms of keeping their tenure under control, and also a manageable sort of EMI that they can pay. Since we know that, okay, rates are going to go up over the next 1 year, I mean, it may go up by 100 basis point or 150 basis point, whatever it is. So, I mean, one should take a remedial step. And if your EMI is say 45,000 a month, just go to your bank or housing finance company, ask them to, I mean, if you can spare 2,000 more, 3,000 more, just go and tell them that you want to increase the EMI. What it will do is it will keep your tenure under control. It will keep your EMIs under control. So when the rate hike happens 6 months down the line, it won't come suddenly to you that your tenure has gone up by say X months, or your EMI is increased by 3,000 rupees. At least that way you have kind of you have prepared yourself, and you are keeping your loan under control. I mean, it's very important that one has because home loan is one of the biggest loan that one has in his kitty. I mean, if one has it, so one has to keep it under control. So this is one way that one can keep it under control. Just go, if you can pay even 2,000 rupees extra, 3,000 rupees extra, 5,000 rupees extra, just go increase your EMI, keep your tenure under control, keep your and because that amount goes directly into principal repayment, that additional EMI that you increase. So that is one way. The other thing that one can do is many individuals don't know that they are still paying higher rates. People, I mean, generally a lot of people don't have a practice of keeping a check on their loan and what is the rate that they're currently paying. Suppose banks are offering, or housing finance companies are currently offering 6.7, 6.5, some are even offering, but people did not visit their bank or housing finance company to kind of bring their loan rates revised. So I mean, they may be still be, many of them may still be paying around 8%, even though the market rates are 6.5, 6.7. I mean, one could have just gone to the bank, paid a switchover fee, and got their loans converted at 6.7% or 6.8% based upon their whatever the rating is, civil rating and all this. So people also need to visit their housing finance companies or bank offices and see if their loan rates are say 8%, and if they can bring it down to the current rates, okay, which is maybe around 7%. So then what you do is, I mean, you by paying a fee of say 2.5 or 3,000 rupees, you bring your rate down, and that leads to a significant reduction. It brings down the tenure, or even in cases EMIs also. So that one should do. In the that you have to go and visit to and see, or you can, in case your bank or housing finance company is offering the details on their website itself, you can just log in and check all of that. So one needs to be a bit diligent. You have to check how your what's the current status of the loan, what is the rate of interest that you're paying, whether you can bring it down by paying a switchover fee. If all that is done, if there is additional money that you can spare, that you can increase your EMI, do all of that, and that is best that you can do. I mean, rest, it's just going to happen. Your rates are going to go up, your EMI is going to go up, or the tenure is going to go up.